Hey guys, this is Accountant Deja Mayer here, and in today's video we are going to discuss the top 3 objections to tracking your coaching and consulting income and expenses. So it's easy to skip this step, right? It takes no effort and you don't have to prioritize looking at numbers all day, especially if you aren't a numbers person or numbers just aren't your thing. But what are you really saying to the universe about your business when you don't operate it formally? What do I mean by formally? Well, do you know what you make in a given year? Do you know how much revenue is coming in on a consistent basis? Do you know how much money you make every week, every month, and every year? If so, way to go. Way to go. But for the majority of people, when I ask this question, they are guessing when it comes to how much revenue their business generates. Did you know that if you make over $400 in self-employment income throughout the year, that it is a requirement to file that income on your taxes? How can you accurately file your income and expenses if you don't know exactly what they are? How do you know if your business is growing month over month or year over year if you aren't tracking those metrics? How are you measuring the profitability of your company? Now let's back up, because I know some of you may say, oh, well, I look at my bank statements to see how much income came in. Maybe you look at Stripe, maybe you look at Kartra or whatever your payment processor is. But did you deduct the operating expenses? Did you deduct your software, your digital platforms, your payment processing fees, the payroll costs, contract labor, cost of goods sold? How profitable is your company? What areas of opportunity do you have based on that profitability? It's illegal to guess on your taxes, believe it or not. It's illegal to fudge the numbers or to claim more or less expenses so that you can get a greater refund. And I see this happening a lot. So in today's video, we're going to tackle the top 3 objections that I hear from coaches and consultants around tracking your income and expenses. And then we're going to talk about some of the pros and cons of each. But before we get into it, if you guys are new to me, I just want to say hey, hi, and welcome to my network. My name is Deja Mayer. I am an accountant and tax strategist, and I help coaches and consultants make millions while paying little to no money in taxes. We're able to do this through business tax preparation, accounting, and CFO services to help you manage and maximize your taxes and bookkeeping. Let's get into it, guys. The top 3 objections that I hear when it comes to tracking your coaching and consulting income and expenses. I just heard this one the other day. Number 1, I don't care about the money. I care more about the impact, helping people, and doing what I love. Has this ever came to mind when you think about tracking your income and expenses? That's all good and dandy. Like, we all want to create a great impact, right? We all want to leave a legacy. But this is the question that I would present to you. Do you want to continue to operate your business as a side hustle, or are you moving towards a corporation? Corporations are around for decades. Corporations have the profit margins to help more people and create a greater impact. Think Amazon and how quickly it grew. Think Lyft or Uber and how quickly they grew. Corporations have documented processes and procedures that they use to grow and scale their company to multi-millions while paying little to no money in taxes. They have this through their financial departments, right? These companies have carryover deductions from their startup years. So for instance, we all heard that Amazon pays $0 in taxes on an $11 billion plus income, right? You heard that, right? That wasn't the first year that they were able to pay $0 in taxes on a multi-million or a multi-billion dollar income. When Amazon first started, they weren't profitable. Like many businesses, in the first 3 to 5 years, they didn't have high profit margins. They were actually operating at a loss. And those losses, they were able to carry over to the next year. So let's say, for instance, they had a $40 million loss, right? But they're at a 0 taxable income because they've already taken credits and deductions. You know, they've got their tax liability down to 0, but now they still have $40 million in carryover deductions. Well, they don't just lose those deductions, they can carry over to the next prior year. So the good thing about it, in year 4, in year 5, in year 6, in year 7, when Amazon starts to become profitable, now they can take those deductions from their startup years that they weren't able to use, and now they can use that to reduce their tax liability. And that is how they pay taxes on a multi-billion dollar income. a few different times. Corporations set up financial departments. They have AR teams, which is accounts receivable, that collect on outstanding invoices or payments. They have AP teams, which is accounts payable, that make sure that their bills get paid on time and that they get maybe incentives for paying earlier. They have payroll teams so that at the end of the year they can get incentives for hiring or offering fringe benefits. They have a bookkeeper and financial reporting in place to make sure that they're on track with hitting their quotas. And let me just say, they bust their butt to hit their quotas, okay? And they push everyone on the team to participate in achieving these expectations. And for you as a coach or consultant, as a smaller business owner, I'm not even gonna say as a small business owner, maybe you don't have Amazon's budget to invest in an accounting team. You might be the accounting team, right? You may be the one collecting on past due payments. You may be the one paying all of the operating expenses and business bills. You may be the one taking care of payroll, but you still need to have the proper systems and procedures in place so that it gets accomplished. At the end of the day, it needs to get accomplished, right? But without the data, it will be hard to track the progress. If they don't have a streamlined system in place, if they don't have systems in place, if they don't have tools that they can use to track the data, none of that can be possible, right? Corporations also allow you to separate yourself from the business. So as you're growing this business, a lot of us are growing businesses so that we can create a legacy for our family, so that we can leave generational wealth, so that we can impact people for years and years to come, right? We want to be around for a long time. With that becomes separation of ourselves from the business. And even if you're thinking like, hey, well, I'm not a C Corp just yet. But as business owners, again, we do all the things. And again, instead of having those departments, it's us wearing all the hats, or it's our VA, or it's our OBM, but we still have to have the systems in place to be able to assist them, right? You can't help people if you fail. Remember that. As much as you want to be the saving grace, as much as you want to help God's people, as much as you want to charge lower than your competition so that you can be a blessing to God's people, you can't help anyone if you fail. You are able to impact more people if you can keep the doors open all year round. You're able to help more people if you aren't operating from a place of scarcity because you don't know if the business needs will be met or the business financial obligations will be met in the next few months, right? You're able to help more people if you have consistent income coming in and you're able to forecast what the business is going to make next month or the prior month so you can properly plan, right? If that next launch, you don't have to worry about if that next launch will be as successful as you hope if you're able to track the numbers and see what you did last time around. If you're able to make sure that you've been, hitting your goals as far as your leads and your lead conversions, right? It's important that you know the numbers. It's important that you're consistently tracking the numbers and analyzing them for growth and improvement. Now, if you ask me, Deja, what numbers are you talking about? Start with bookkeeping. Before we can get to tracking metrics and KPIs and all of that stuff, have you a solid, healthy bookkeeping system in place. Know how profitable the company is. Know what your cash flow is on a regular basis. Know if you are profitable or if you're operating at a loss. Know what your business expenses are on a monthly basis. So when someone asks you how much are you paying each month for operating expenses, you can just spit it out. $200, $2,000, $5,000, $10,000. Start with that solid bookkeeping system, but don't allow yourself to not track your income because you're so caught up in, just loving what you do. We all love what we do, right? But you're no longer operating a side hustle. This is your business. It can grow into a corporation. I'm not going to say for everybody. Some people may not want it to grow into a corporation, but this is your business. This is your legacy. So you want to get in the habit of operating it formally. Does that make sense? All right, number 2. The second reason that I hear that coaches and consultants don't want to track their business income and expenses, I don't want the government in my business. If you haven't said this before, have you heard anybody say this? Like, I don't want the government in my business. I understand some folks' concerns, right? Most times it's because you don't want to pay the extra in taxes, right? Let's be real. You don't want to come out of the extra money. Sometimes I hear that, when you're receiving, government benefits, some people don't want to track or report their true income and expenses because they don't want to lose those benefits. Let me pause right here for a second, okay? This is not everybody. Let me put that disclaimer out there. But I have heard quite a few people say that. And I want to address it because I feel like that's a mindset block. Because if you're so blocked on, I used to work with this lady. She used to get Social Security income. And on Social Security, you can only make a certain amount before they reduce your Social Security benefits. It's like you can still earn money, but the more money you make, the less they're going to pay you in Social Security benefits. So she used to always be scared to get a raise or to work more because she didn't want it to affect her Social Security benefits. Mind you, she was getting $1,200 in Social Security benefits per month. If this company was to hire her full time, she had the opportunity to have a monthly salary of $5,000 per month. So let me get this straight. You don't want to work because it's going to reduce or eliminate your Social Security benefits, but you're getting almost 5 times more in the workforce. You got to change your mindset. When you're thinking about growth and elevation, the universe is going to give you back what you put out there. So if you're worried about scheming and scamming and trying to get every little thing, it's not worth it. Because think about that extra $500 per month in food benefits. Listen, what if you were getting an extra $5,000 a month in revenue, an extra $15,000, an extra $50,000 per month? Then how simple would it be for you to order your groceries on Instacart and have them delivered to your door versus worrying about government benefits? So that's one reason. Don't ever allow that to stop you from excelling, from experiencing true financial freedom. True financial freedom gets you away from poverty, gets you away from even low and middle class, and puts you in that top 1%, right? But you have to be ready and willing to go there, and you can't let anyone or anything stop you from getting to that next level in your life. And that's all I'm gonna say there. But let's go back to the taxes that you pay, because I know many more people are just afraid that they are gonna pay an arm and a leg in taxes, and they get this raise, right? They're making multi-six figures now, they're making $1 million, they're making multi-millions now, but they're afraid that they're going to take 40-50% of their income and be giving it to Uncle Sam. So what's the point of getting a raise if you're going to be giving away all of your income? And I wholeheartedly understand that concern. And let me just say, there are tons of ways for you to eradicate your tax liability. There are tons of ways for you to reduce your tax liability so you aren't giving away 25, 35, 45% of your income. I've definitely seen people that give away most of their income, but most of our clients are in a 10 to 12% tax rate, which means if they make $100,000, only $10,000 is going to taxes. If they make $500,000, only $50,000 is going to taxes. If they make $1 million, only $100,000 is going to taxes. And now they have the $900,000 to reinvest back into the business, and sometimes even less. Right? It is possible to pay $0 in taxes on a multi-six-figure income. If Amazon can pay $0 in taxes on an $11 billion income, surely you can pay $0 in taxes on a six-figure income, on a multi-six-figure income, on a multi-million-dollar income. Did you hear me just say that Amazon pays $0 in taxes on an $11 billion income? So surely our small businesses can do that too, right? How did Amazon accomplish this? They did it through tax breaks. Through tax breaks. There were no abracadabra, there were no magic wands, there were no credits that they have access to that you're not allowed to have access to. People give me when they say, oh, rich people, they get this, and this. Well, the good thing about tax credits and deductions, the same tax deductions and credits that Amazon has access to, your coaching and consulting business has access to. How do I figure? Well, let's look at the main drivers to them paying $0 in taxes. There were three main drivers of Amazon's tax break. The first one was investment in research and development, R&D. This is a huge tax deduction, and it's become bigger and bigger over the last year or two. I would say, since the pandemic, businesses have been able to deduct millions and billions of dollars in this research and development, right? Amazon invests heavily in research and development, and therefore they benefit from the tax credit. That year that they paid $0 in taxes, they spent $22.6 billion in research and development. Why? Because they're finding ways to make their company more profitable. They're finding ways to grow their company to scale even quicker. They're finding, opportunities in the marketplace. And guess what? The benefit is that you can take tax deductions, take tax write-offs, take tax credits just for investing back into your business. For Amazon, it was the R&D tax credit, research and development. For you, it could be learning and development. You know how much money you spend on digital courses. You know how much money you spend on coaching programs. You know how much money you spend on VIP days, or, just information here and there, marketing or advertising to help you grow and scale your business, right? That is something, those are all tax write-offs, right? Learning and development, research and development, training programs, coaching, those are all tax write-offs in your coaching and consulting business. So just like Amazon, you can take those as a tax deduction dollar for dollar as well and not have to pay taxes on that income. They also benefited from investment in property, plants, or equipment. What type of property could you purchase to have a tax write-off, right? We all want to build generational wealth. We all want to leave a legacy for our family. We all want to purchase that investment property that we can use to bring in passive income. Could the business purchase that passive income property? Is there equipment that you need to invest in that is 100% tax write-off? The last thing that contributed to them paying $0 in taxes on an $11 billion plus income is employee stock compensation. So Amazon moved away from cash compensation to stock-based compensation for their employees, and this really helped when it came to their tax breaks and being able to decrease their tax liability, right? So for you, what fringe benefits could you offer your employees? Could you hire people as employees now and write off their salary? Could you offer them a 401k? Could you offer them health insurance? Could you offer them an HSA, which is a health savings account? Can you offer them an FSA, which is a flexible spending account? There are so many fringe benefits that you can offer to your employees, which helps just create an environment where people want to work for you, where they see a benefit in working for you, and you can retain employees a lot longer. But these are also tax deductions and credits that will help to reduce your tax liability. So Amazon largely pays no corporate tax, precisely because it reinvests those profits back into its operations, and you can do that too. So when you're thinking about not wanting the government in your business, right, I just want you to think about, what is the motive behind that? Get down to the bottom of that statement. What are you trying to avoid? What are the pros and cons of doing this? What are you giving up instead? Because by not wanting to report your income accurately on your business taxes, are you missing out on potential partnerships, investment opportunities, capital funding, selling the business eventually? Do you plan on having this business forever? Or if it's profitable enough, would you sell it and start a whole new baby, right? Building up enough business credit so that if anything happens to you, whoever you leave the business to will have some wiggle room, will have some time to get acquainted with their new business before the door is shut down for lack of income, right? If you want to put yourself in a position where you can qualify for business funding, where you can grow and expand, where you can eventually sell your company, you are going to have to report your income to the IRS. There is no magic wand for this. And then lastly, I hear from coaches and consultants that tracking their business income and expenses is too time consuming. They hate numbers, they hate taxes, they just want to be able to focus on doing what they love, and I totally understand this. But at the end of the day, you need the financial data. So what can you do? If it's getting to a point where you can't manage it and the business is growing so quickly that you need to focus on other objectives, outsource it. Outsource it to an experienced accountant that can help you as you grow and scale, right? That can help you manage and maximize your taxes and bookkeeping while you focus on bringing more prospects into your business and closing those prospects and getting more people into your programs. It's no way around it. You can't avoid it. Not only do you need to be tracking your income and expenses because it's going to significantly reduce your tax burden, but again, what happens when it's time to sell the business? What happens when it's time to create an exit strategy? What happens when it's time to go public? When it's time to partner with someone to invest? You need those financial reports. You need that bookkeeping in place, and then take it a step further. Once you get that consistent bookkeeping in place, having someone that can look at those numbers and analyze them for you and give you those numbers on a consistent basis so that you can make key business decisions, so that you can qualify for funding, so that you can get approved for funding. Listen. Y'all see how passionate I am about it. There are so many more reasons that I can give you why you should be tracking your income and expenses, but the first thing is you just want to do it. I'm going to give you a bonus one because I just thought about this one. People say, I haven't made enough money yet. That is a big one. I hear coaches and consultants say all the time, I haven't made enough money yet. From the first dollar you get in your business, bookkeeping is one of those first things you should have in place. It's the foundational piece of your business. Again, you get an LLC, you get an EIN number, you put your bookkeeping in place. I don't care if you have to do it manually on a spreadsheet or if you want to do it electronically. And that's actually a video that I might create soon, how to manage and maximize your taxes and bookkeeping. Just give you guys some different ways that you can do it on your own or ways that you can outsource it. But that's one of the foundational pieces as a business owner, because you want to be able to look back a year from now, 2 years from now, 3 years from now, 4 years from now, and have that financial data that you can use to forecast what's going to happen in the business. Yes, you can see what's going to happen in your business, 6 months from now, a year from now, 2 years from now, based on what's happened in the past. They're called trends. You can look at trends. You can look at benchmarks. You can measure your performance against other coaches and consultants in your industry, their performance, right? You can measure your lead generation against other coaches and consultants' lead generation, but you have to have the financial data in place. Don't wait. When you hit that first six-figure mark, or you hit that first multi-six-figure mark, and business is just busy and growing, you're not going to have time to go back and be trying to do cleanup bookkeeping and figure out what was this expense from 2 years ago and like, you're not going to have time to do that. If you do it once you start, you can maintain it. It's much easier to maintain something than to start from scratch. I have my housekeeper come in to clean up the house tomorrow, and I was like, well, do I really want to have him? I could clean it up myself. But listen, once he does that deep clean, now I'll be able to maintain it. I don't have to worry about scrubbing the tub and mopping the floors, and I hate doing all that stuff, y'all. I ain't even gonna lie. But once he does that deep clean, now I can maintain it. It's much easier to maintain a process than to wait till you blow up, because I guess that's what you're thinking in your head, right? I need to wait till I blow up. I need to make sure I'm making $5,000, $10,000, $15,000, $20,000, $30,000, $50,000 consistently per month before I can track my business income and expenses. And it shouldn't happen that way, because it's going to be a headache trying to go back and be reactive instead of proactive. Does that make sense? I hope so. What questions do you guys have, or what are some other objections you've heard to claiming your business income and expenses, or what are some of the objections you have in mind? Maybe it's something particular to your situation, why you don't track your business income and expenses that I haven't mentioned here in this video. Go ahead and leave them in the comments below, or slide in my DM and let's chat about it. And if you are looking for ways to manage and maximize your business taxes and bookkeeping, to streamline the process so that it's simple and smooth for you, to automate the process so that you're hands off, right? well, not completely hands off. It depends on if you outsourcing it or you doing it yourself. But you can streamline and automate the process to where you don't have to spend hours each month doing your bookkeeping. You can literally, be inside that bookkeeping system for 20 minutes and be done, depending on what you got going on. If you're looking for ways to streamline and automate the process and to save countless hours during tax season, we should chat. Go ahead and click the link in the description of this video to schedule a quick call with me so that I can learn more about your business, learn more about your current bookkeeping system and how you manage your taxes and bookkeeping, and see if I can help or provide any resources. I hope this information was helpful, and until the next video, be blessed.